everyone. This is Manoj Kumar, Secretary of Bilaspur Chapter of Cost Accountants of India. Welcome to all. Today our topic is cost audit tools and maintenance of cost records. We have two eminent speakers. One is Mr. Alokesh. He is a practicing cost accountant and he is an ex-employee of Corinda Limited. He has 30 years of experience in costing. Presently he is practicing as a cost accountant as a GST practitioner. So without wasting our time, we hand over back to Mr. Alokesh. He will tell about pragmatic approach in cost audit.
Good evening to all, online and offline. I need not emphasize by introducing myself because this is a program organized by Bilaspur Chapter of Cost Accountant, and being a chairman, you must know about me, so I need not emphasize. I am going directly to our topic, pragmatic approach on cost audit. The pragmatic approach on cost audit means I will not tell you the theoretical portion of the cost audit, but also I will try to emphasize on the intricacies lying in the cost audit, conducting of cost audit. And because I was in Coal India and handled cost audit since 2012 to 2019, and now I am a practicing cost accountant and doing cost audit in various PSUs and private sector. So I start my presentation, pragmatic approach on cost audit. No? Is it not here? It will be here. Now start pragmatic approach on cost audit. As I am a fellow member, I try to elaborate the intricacy of cost audit, and I think there are many students also online and offline. So my emphasis will be to satisfy practicing cost accountant as well as the students also. First, cost audit. Cost audit has been introduced in 1965, first in India, when the section 233B has been inserted in Companies Act 1956. At that same time, 233B as well as there are two rules. Cost auditing rules framed by Central Government of India and cost accounting record rules maintained by Central Government of India. Cost accounting record rules was for industry based. For automobile industry, there was a separate cost record. For power industry, there was a separate cost record. For other industries, there was a separate cost record. The cost accounting record rule for each and every industry which was used prior to 2019 is available in our institute portal. You can go through this. But from 2014, there is a new, after introduction of Companies Act 2013, there was a new rules, Companies Cost Records and Audit Rules 2014, and which is being updated till October 2019. As per that, all industries, whether it is automobile or whether it is coal industry or whether it is textile industry, whether it is a drugs and pharmaceutical industry, all should be report, cost auditor should report in the same format. So we have left the approach cost accounting record rules to report to. Now the cost audit is based on report, not on emphasis with cost record. The Companies Act 2013 have declared that companies cost record and audit rule has two sectors, that is the regulated sector and unregulated sector. The regulated sector is for six industries. What are these? Number one, telecommunication. Number two, power. Number three, petroleum products. Number three, drugs and pharmaceuticals. Number four, fertilizer. Number five, sugar. And number six, industrial alcohol. These are the six industries where government is regulating, and these are called regulated sector. As per Companies Record and Audit Rules 2014, this is A group. And rest of the 33 group, there are 39 industries covered under cost audit right now, and 6 is regulated sector and 33 is unregulated sector. Now, cost records, in my opinion, I again emphasize, in my opinion, and as per Companies Act 2013, under section 148, there should not be any other record other than the details to be maintained by the company as per CRA 1 of Companies Act and Rules, Records and Audit Rules 2014. That means the company which comes under a cost audit should not maintain a separate set of cost records, but they have to maintain the details of data as per CRA 1. We have to prepare the cost annexed to the cost audit report based on the CRA 1 data that will come under, that I will cover in the next. But some analysis has to be done of the financial data of the company in order to comply with the CRA 1. ये वाला Chain drive में
शेयर में पेंड्राइव में डेटा आपसे चलाइए
ये चला जाएगा तो हम क्या करेंगे? उसको हमको दे दो, इसी से चलाना पड़ेगा हमको। और ये CP 22-23 उसका अंदर में जो है, ठीक है? मिला बोला? Now, sorry for the introduction. In physical mode में, that will be no sharing in the physical mode. So in online mode, so we have to change the. Now it is all right. Okay, carry on. Now second point is this. The we have to apply cost audit. To whom cost audit will be applicable? In regulated sector, that means for 6 industries, if the total turnover of the company is more than 50 crore or turnover of a single product for which cost audit has been ordered by the central government exceeds 25 crore, the company has to conduct the cost audit by a practicing cost accountant. For unregulated sector, if the total turnover of the company of the preceding financial year exceeds 100 crore or any product for which cost audit has been ordered exceeds 35 crore turnover in the preceding financial year, from the next financial year, the cost audit will be applicable to that company. Is it clear to everybody? For regulated sector, total turnover 50 crores and for a single product 25 crores. For unregulated sector, total turnover is 100 crores exceeds and for a single product 35 crores. Next, what are the basic legal complications as per company's cost records and audit rules? A company which comes under a cost audit has to appoint a cost auditor who is a member of the Institute of Cost Accountants of India and having a practicing license. A firm or a cost accountant individual, company has to appoint cost auditor for that particular financial year from which it comes under the cost audit purview, 180 days from the starting of the financial year. That means 180 days means 28th September. 27th September. In normal course, 180 days means we understand that this is 6 months. That is not 6 months. 27th September is the very crucial date for a cost accountant. Within the 27th September of the financial year, a cost auditor has to be appointed, and the intimation to the cost auditor as well as central government to be intimated under CRA 2 to be filed in MCA portal. Cost auditor should get a appointment letter, and central government will get CRA 2 in the MCA portal. The MCA portal will generate a SRN number, service request number, and that will be the suffice to intimation documented authority of the in the hands of company. It will be required by the cost auditor at the time of filing the cost audit report or prepare the cost audit. Next, when to report? The cost auditor should report 180 days, within 180 days of closing of the financial year. That means again 27 September of the financial year. Okay? I am giving one example. If for 21-22 the cost auditor should have been appointed within 27 September of 2021, and the report of the cost auditor should be submitted to the company within 27th of 2022. Is it clear? Now, after getting the report from the cost auditor, within 30 days, the company, previously it was the burden of the company, now it is cost auditor, now it is the burden of the company. The company has to file in XBRL mode CRA 4 along with XBRL instance document of cost audit report in XBRL mode should be filed within 30 days of receipt of the cost audit report from the auditor. Now one question is there, that if the company did not give the data to the cost audit within 27 September, what will happen? The company will be penalized, but not the cost auditor, as because cost auditor did not get any data. Not even data. After conducting the audit, the auditor finalized the annexure to the cost audit report, and that annexure has to be adopted in the board of directors through audit committee recommendation. This point is very vital. If audit committee did not recommend to board, the board will not approve the annexure to the cost audit report, and the cost auditor would not be filed in time. So for company, it is very vital that he should get the annexure, audited annexure from the auditor within 27, arrange the board meeting, approve it, and hand over to the cost auditor to file send the audit report within 27 September. Now, this is the legal complication, and as per company's records and audit rules. Now, auditor has got the appointment letter, central government has got the CRA 2, auditor has come to the place of auditing, that means company. What will be the audit program? wherever I conducted or conducting cost audit, I follow this program. That's why I given the name of pragmatic approach. This is the practical approach I have applied to any company where I am conducting the audit. I visited the factory, office, hospital and any cost center. I discussed with the head of the department and collect the data as much as possible regarding the methodology, functionality and the weakness, strength, etc. etc. Also, quantitative and quantitative data should be collected in this place. There should be a point, the quantitative data collection. What are the quantitative data? Production, dispatch, sales, capacity, and any other input, any input quantitative data. That means if there is a using of diesel, quantity of diesel, quantity of lubricant, quantity of raw materials, quantity of direct materials, these are the quantitative details you have to collect from the company because it will require for your audit. Next point, verification and examination of cost records. I will tell you in detail how to verify the cost record. Now just it is a point I just mentioned here. Next point, analysis of cost data, physical data and trend analysis. After verification of cost data, you have to analyze the data. You have to analyze the physical data and trend analysis. Next, if you are appointed as a lead auditor, our company has appointed a single auditor. And for entire company, you will be the branch auditor as well as lead auditor. So, this will, you have to consolidate the data of all branches and file a report, prepare a report in consolidated manner. However, the rules permit that branch auditor can also file the return, prepare the separate report and file the report in CS portal individually. But it is not a practice. In practical field, company files CRA 4 in a company as a whole. Next point, what are the data to be considered? Are physical information you require. Number 1 point, first you ask for audited profit and loss and balance sheet with all schedules. Number 2, how they are grouping the financial data to arrive at the average cost statement, which I will show you in the letter. List of foreclosed contracts. Now, what is foreclosed contract? In different companies, if the contractor did not perform the contract as per the contract agreement, the company foreclose this contract. You have to get the list of foreclosed contract. It is very vital for costing point of view. Why? In an interview, the Director of Finance of Western Coalfields Limited asked me why it is required by you. I told him, sir, if you foreclose a contract which is at a rate of 100 rupees and after that you again contract at a price of 130 rupees, that 10 rupees is an extra cost you have to burden and this will be absorbed in your cost. So this is an abnormal situation and that should not be part of the cost. That's why everybody should get this record from the company. Next, hindrance register. Again, hindrance register, as per hindrance register, there is a clause between the contractor and the company that every point, if there is any stoppage of work or if in disturbance on the part of contractor or on the part of the company, that will be recorded in the hindrance register. The hindrance register should be maintained properly, contract wise. And if you go through this hindrance register, you will get that several times the company has recorded that the work has been stopped due to fault of the contractor. Again, you have to raise this objection that why the penalty has not been imposed on the contractor, and that penalty has to be reduced from the contract bill. Otherwise, contractor, the penalty will be part of the cost. So you have to eliminate that part also from the cost of production. Next point is a vital point in certificate of installed capacity. And because in the annexure to custody report there is a point installed capacity, and it has to be compared with actual capacity. I will come this point in the latter. Again, statutory record. Every company, whether it is a coal company, power company, or textile company, or drugs and pharmaceuticals company, are keeping the records as per the industry norm, some statutory records. That statutory record you have to ask, because this is the document from where you have to verify the quantitative data you have collected. So statutory record, collection of statutory record is the must. Next, internal audit report. You have to ask for internal audit report and go through it. It will give you more clue for conducting your cost audit and give you emphasis where to trust. Next, many companies maintain MIS reports for production, sales and performance, capacity utilization, man, machine, etc. etc. If the company maintains any monthly report, monthly MIS system, you must gather that information. Cost center wise consumption of utility. Utility means power, water, reusable petrol, anything else. Industry, it varies, utility is varies industry. In coal industry, water is not a utility, but in a power industry, it is an utility. Now, we have to collect the cost center wise capacity, available, utilization in respect of norms, and what are the norms, what are as per director's report. Because if your report does not match with the director's report's quantity and MCA has pointed it out, you will be liable for the answer. Company will not be responsible for that. Be careful on this point. Quantitative data reported in the director's report must tally with your cost audit report, and if you do not agree with this data, give justification and qualify the report. That this data appeared in the director's report is not correct in my view, and give the supporting document how we have calculated and how we are contradicting the data as appeared in the director's report. Because director's report is also filed in the NCA portal. Month-wise mandates loss on strike, abnormal loss. Any mandates loss, manship loss, material loss, any loss due to abnormal situation should be identified and booked under abnormal cost. This should not be part of the cost. That's why you have to ask this information from the company. If they told in mouth, please give a certificate. I am usually obtaining certificate for each of these elements. Next, month-wise power and other energy, if used by the industry, should collect and observe whether any penalty on account of low power factor has been paid or not. If it is a consecutive month, you must highlight this in the report, because penalty in the recorded demand or Again, if the penalty on account of power factor is so high, the company is losing, and you must highlight. What is installed capacity? Installed capacity is the capacity determined by the manufacturer of the machine, equipment, at the time of purchase, that this is the installed capacity assessed by the engineering also. In many times, the company reviews the installed capacity by its engineering department or research department, and that will be circulated to everybody that this is the installed capacity as on first day of the financial year. In coal industry, CMPDL is circulating the capacity utilization after measuring the different capacity of the different equipments, addition, deletion, considering all these things, and they are declaring, certifying the installed capacity. And you have to ask for that statutory record from the company that I want installed capacity certificate from your engineering department or the department concerned on that. Next, computation of activity-wise depreciation. Activity-wise depreciation means in financial record, they put the depreciation as a whole. In the profit and loss, you will get depreciation and amortization. But in our costing record, for the purpose of CRA 1, depreciation should require activity-wise. Activity means for production activity, for repairing activities, for administrative activities, for selling and distribution activities. For example, if the plant, depreciation of a plant should go in the production cost depreciation. But depreciation of administrative building should be booked under administrative overhead, and that should not be clubbed under depreciation head in the average cost statement. Similarly, the depreciation of selling and distribution machinery is there. For coal industry, it is a feeder maker or CHP. The depreciation of that should be booked in the selling and distribution overhead and not in the depreciation head in the average cost statement. Again, if the company maintains the budgetary control system, you have to analyze and identify the variance of budgetary control versus actual comparison. Cost finance reconciliation, that means cost accounting, profit and loss as per costing and profit and loss as per your cost record should reconcile. Cost accounting policy of the company. Every company must have a cost accounting policy in order to adapt to the compliance of company's cost audit report, record and report. You have to collect the cost accounting policy prior to commencement of the audit, as because annexed to the cost audit report or cost data should be prepared on the basis of cost accounting standard and cost accounting policy of the company. Next, verification and examination of cost records. You have to verify the mapping of financial data into the head of average cost statement. You have to see average cost statement is nothing but a elaborate version of the profit and loss account, but in a different fashion. I will show you. So now the point is that you have to verify each head of the average cost statement, which is the costing profit and loss in colloquial language. You have to verify the mapping. How you will verify? You will verify the cost mapping considering the cost accounting standard and cost accounting policy of the company. Next, you have to identify the abnormal increase, decrease or any element of cost from the previous year or industry norm, etc., etc. So you have to consider that one also, because any abnormal increase should not be part of the cost. It should be booked under reconciliation statement. Again, one of the vital point is valuation of stock. Opening stock and closing stock should be valued at cost only. In finance, it is cost or net realizable value which is lower. But in the cost record, both should be in the as per cost of production. It should be valued at cost of production per unit. Next, we have to verify the service cost center cost to verify the apportionment, absorption, identification of allocation of the cost, so that the correct cost of service cost center should be determined. Next, indirect tax. Now GST has come into the picture, and input tax credit is a very vital factor for a cost auditor. Because one thing I must clear, that GST department collecting the cost audit report from the cost audit branch regularly. If the annual return filed by the company in GST portal does not match with your indirect cost reconciliation, you will be in trouble. So you have to collect the GSTR 1, GSTR 3B reconciliation and input tax credit available, claim and unutilized portion, amount paid, details of GST, royalty and other indirect taxes should be collected and verified from the basic record. Don't rely on the company's prepared statement. Go through it, because it is a vital information. You have to go through it, and it will be cross-checked by the MCA or GST department from your report versus annual report filed by the GST department. You have also to verify all the annexures to the cost audit report rule, civil contractor bill, transportation bill, budgetary control system, finance reconciliation, guardian analysis. These are the all points. You will get details. If you go into details, one by one it will come. And you have to cover all these points so that your report should be realistic and should be based on factual data. Analysis of cost data, cost and physical data. You have to, and now you gather the physical data, cost data. You have verified the data also from the basic record. Now you have to analyze. How you will analyze? You have to analyze it, compare with physical previous year's figure, compare with industry norms, compare with your correlate with other cost element. If the cost of the diesel is booked 1 lakh and it is 100 rupees per liter, so 10,000 units should be consumption. If it is 12,000 or 11,000, or if it does not match with the quantity and amount, you must point it out, because the cost data or amount has been arrived by multiplying quantity into rate. So why it is not being tallied? If it is not tallied, you must point it out and try to reconcile why it is not tallied and cover it in your report. Report annexed to the audit committee meeting, one of the chairman of the cost audit committee of the Southeastern Coalfields Limited pointed out that why you people are not trained, analyze the trend analysis. What is the trend analysis? And I and Mr. Moj, who are the secretary of the chapter, have cut a very sorry face. And because we have not analyzed the trend where the cost is going on. So, as a cost auditor, you must see the trend analysis. You will see, if you do the trend analysis, you will get some abnormality or some clue for observation, or it will foolproof your verification. Next, consolidation of cost record as a lead cost auditor. That means after getting all the data from the branch, lead auditor should compile and consolidate. This is nothing but arithmetical accuracy, so it need not be emphasized. Now, this is annexed up to the cost audit report I am going. This is the actual annexure. This is part 1, annexure to cost audit report. As per company's cost records and audit rules 2014, this annexure to be filled up and submitted along with audit report by each and every company under cost audit. And there should not be any deviation from that format. The format is for every company, whether it is automobile, drug and pharmaceuticals, or textile, or coal industry, or sugar industry, or fertilizer industry, whatever the case may be. The format is same. In the first format, it is giving the general information of the company. It is very easy. Company will fill this in the data. Company's name, the date of beginning, and date of reporting, currency, whether it is come under these are the data, basic document. Everybody is known, it is not to be explained. Second point is, annexure to cost audit report has the 4 parts. Part A, Part B, Part C, and Part D. What is Part A? Part A has 4 paragraphs. Part 1, Part 2, Part 3, Part 4. It is a general information part. Part B is meant for manufacturing industry. Part C is meant for service industry. And Part D is meant for all. Part A is 4 paragraphs, Part 1, 2, 3, 4. Part B is 2 parts, Part 2 and 2A, 2B, 2C. Part C also, Part 2C, C2, C2A, C2B, C2C. And Part D has 6 parts, D1, D2, D3, D4, D5 and D6. I am coming to this point one by one. Part 1, A1 is general information about company. A2 is the general information of the cost auditor. A3 is the cost accounting policy. The cost accounting policy is the A3. And A4 is product or service wise detail. One point must be noted that the A4 must tally with the profit and loss account of the company audited account. It has no relevance with the cost reports. A4 is the revenue part of the profit and loss account. It has 2 parts: operating revenue, non-operating revenue, other income, comprehensive income, and last one, the turnover as per GST record. Why it is required? Because this turnover as per GST should match with the turnover reported in the annual report of the company. I am telling 5 minutes before. In most of the company, cost auditor left blank this column and it will be filed. But it is a discredit on the part of the cost auditor that he has not acted due diligently and did not discharge his duties properly. I must get this data from every company and reconcile. If it is not tallied, reconciliation is to be given. That for this reason, the two turnover is not tallied. So, in this record, everything should be collected from profit and loss account of the company, and GST turnover should be mentioned here as per annexure in D6, which I am coming to the last part. Next, B1, this is applicable for manufacturing unit. This is the main grasp of the report or annexure. B1 is the quantitative data which you have collected and audited and verified. Here you have to give in the capacity, available capacity, installed capacity, addition of the capacity, actual capacity utilized, utilization percentage, selling and dispatch quantity, everything you have to give in this format. So, when I discussed the information to be gathered from the company, I told that you have to gather the quantitative detail. Here it will be come. Here it will come. If you will not verify the quantitative details, you cannot verify this annexure. Annexure B1. Next part is annexure B2. The annexure B2 is the costing profit and loss account in a colloquial language. Here you will determine the costing margin. Costing margin. We are not telling that it is a profit. It is a costing margin. Costing margin and profit and loss. Profit is different. Because in this average cost statement, this is called average cost statement. B2 is called average cost statement. In average cost statement, every cost element in the amount and per unit cost has to be booked. And I will tell you in details how this data has to be verified headwise. I told you few minutes back that mapping of financial record, financial code should be investigated by the auditor, because the average cost statement is being prepared by every company from financial data, that means trial balance. From trial balance they are grouping as per average cost statement. And this is something else from profit and loss of the company. I am coming to the one by one point, how you will verify this point and what are the points to be emphasized, determining the actual requirement of this statement. Next, B2, B2BC. Here you have to give the details, quantitative and amount, rate and amount of the utility, material and industry specific expenses. You have to give. So, you have to collect, if you report in the B2, that there is a material, there is a utility and there is a industry specific expenses, you have to collect the quantitative data also for that particular expenses to justify this annexure. If this quantitative data is not put in the annexure 2BABC, the report will not be finalized and XBRL note will show an error. So you have to give the details also in 2A, 2B and 2C. 2A is for material, 2A details of material consumed, 2B is details of utility consumed, and 2C is details of industry specific consumed. These are the three elements. You have to give the details, quantitative data as well as rate and amount. The amount should match with the amount of average cost statement. Be careful on this issue. Next, C1, C2, C2A to B is exactly equal and it is for service unit. So I need not emphasize this also. Same thing has to be put the C1, C2, C3 for service unit. Just I'm coming to the point D1. D1 is not to be prepared separately. From average cost statement, you will get the data of D1. Sale, cost of sales, margin, this year, last year. Simple. So, if your average cost statement has been ready, you will get this data spontaneously. But in D2, there is a class. D2 is the reconciliation of profit as per financial account, audited financial account, with the costing margin as per your average cost statement. In the average cost statement, we have excluded some costs which are not part in the come under the purview of cost, abnormal cost, some nature of financial nature of cost, which is purely financial nature, any financial provisions, any prior period cost. These are the several examples which are detailed in the CRA 1, and we will exclude this cost from the financial data. So, margin of as per average cost statement and costing profit and loss and profit as per financial account should not match. You have to reconcile this. Starting from the audited costing profit and loss, add income not considered, less expenditure not considered, under absorption, over absorption, adjustment of under absorption, over absorption, which will elaborately speaking by the CMA Jaydip Tiwari in the next term. He will give how to calculate under absorption, over absorption. I am not elaborating it right now, but this is the reconciliation part. You have to reconcile the costing, profit and loss, costing margin as per average cost statement, along with costing profit and loss as per audit. Next, B3. B3 is also a value addition. It is to be prepared, it is also nothing relevancy with cost record. It should be prepared from profit and loss and balance sheet of the company. Audited profit and loss and balance sheet of the company. You have to, this is a format, you just put the data from profit and loss and balance sheet, you will get the result. There is nothing else, it is only a simple way of calculation. Number D4. You will put from data from balance sheet and profit and loss, you will get the ratio analysis. This is a ratio analysis to observe the financial position of the company. D5. D5 is the related party transaction. Related party transaction means the party to whom arm's length distance is not maintained. That means subsidiary company or your company director is interested in another company, like this. Related party transaction should be reported here, and it should be as per financial record reported by the financial audit. They are also giving the same data in their report. So when both the report are reporting in the NCA portal, both should match. D6. Now I come to the point. This is the reconciliation of excise, duty and GST. Here you have to ascertain the assessable value of the product sold. GSTR 1 should match with the total of the amount CGST, SGST, IGST. Input tax credit should match with this figure, and generally it is being prepared by the tax department of any company, and the company will give the data to you, but you have to verify. How to verify? GSTR 1, you collect the GSTR 1, GSTR 3B, annual report is filed. When the cost audit is going on, the annual report is not being filed because the last date of 31st December. So you collect the data from GSTR 1 and GSTR 3B, input tax credit, you will get the data, how much input tax is available, how much you have availed, how much claim, and recognized from the verification of vouching. This statement is very vital and is being used by the GST personnel. As because I know, when I was in service, GST commissioner, GST person inspector has come in the office and asked this report, and our treasurer Vaibhav Agarwal asked me that cost audit report is asking by the GST inspector. I gladly report that I will not give the data because cost audit report is a very confidential report and should not be shared to others. Right now, it is come to the notice when I come into the picture, practice, that they have every right because the data is in that domain. If I am not giving, they are collecting the data from cost audit bench. So, company should not hide this information, that this information must tally with the GSTR 1 and 3 filed by the company. So, it should be recognized. Now, of cost records. In the average cost statement, we have seen that many of there are cost elements in different heads: direct material, employee cost, direct expenses, industry specific expenses, utility, and many more. The preparation of cost record will be discussed by the CMA, Jaydip, Tiwari in elaborately. I just wanted to inform you that being a cost auditor, you have to careful in the following point: whether the amount derived in the booked in the average cost statement is as per CRA 1 or not, and material cost and other costs should be as per CRA 1 only. One more thing, any company who is come for which cost audit has been ordered, for which industry, if 35 crore has been crossed in the previous financial year, must maintain the cost record. But many of the companies, until and unless they cross the 100 crore, they are not maintaining. This point is now curbing by the company logo from the auditor's Caro report. Now, how to verify the material cost? For material cost, you have to verify in sample basis, receipt issue balance is correct or not in the price total ledger. If there any abnormal cost is included in the material cost, whether penalty or ITC claim is not included, any subsidy grant, any concession receipt should not be part of the material cost. It should be excluded. This should be treated. Any item which may be identified as a project cost auditor, you should care on this point that any amount incurred in connection with voluntary retirement we have to eliminate it and should be amortized. Second, if any recovery, that means quarter rate or school bus fees, any requirement, any fee collected, any amount collected from the company should be deducted from the employee cost. Idle time cost, if any, should be ascertained and to be directly attributable to the cost center itself and should not be booked under direct employee cost. Now next thing, utility. Similarly, in utilities also, you should not take any incentive, grant, duties, taxes for which you have taken ITC. You should not include all these things. Any abnormal cost should not be included. But one thing must be there. If utility is in-house prepared, entire cost, excluding administrative cost and selling and distribution cost, should be booked under this. If in-house utility is general. If brought out utilities, you have to consider gross bills paid to the contractor, money outsider, for procurement of that utility. These are the points to be emphasized. Direct expenses is also, what are the direct expenses? The expenses which are in connection with the production but not to be categorized as employee cost, material cost, property cost. Now, direct expenses should be cost center based. And similarly, here also, any incentive, penalty, duties, etc. should not, abnormal cost should not be included in the direct expenses cost. Next, repair and maintenance. Repair and maintenance is our two types. First, you have to gather the information whether the repairs are being done in-house or through outside agencies. If outside agencies, then gross value of the amount paid should be taken into consideration. But if it is in-house, entire cost of repairing, including the salary and wages of the repairer, overhead and depreciation of the machinery used for repairing should be clubbed and should be booked under repairs and maintenance and should not be booked under natural health accounts. Next, depreciation and amortization. Depreciation and amortization should be as per cost accounting standard, and one single point is that if any asset is under breakdown or is under return but not put in use, the depreciation of that machine should not be put under depreciation. A spare cost which is capitalized, the depreciation should be booked under depreciation. Overhead. Overheads of three types: production overhead, administrative overhead, selling and distribution overhead. So these are the general information. But one thing you have to clear that any abnormal cost should not be booked in any of the overhead. Demurrage, penalty, etc. should not be booked under overhead. Fixed overhead should be apportioned on the basis of normal capacity, not actual capacity. On the basis of normal capacity. These are the points to be considered while verifying the records of overhead. Quality control, if it is brought out, the cost is same, you have to put the gross value. But it should be booked product wise if it is possible. If not, it should be based on an appropriate basis. Penalty, subsidy, incentive, grant should not be included in the quality control expenditure. Technical know-how. Technical know-how is of two kinds. Number one, one-time payment. It should be amortized, and if it is a regular feature, it should be identified If it is identified for a product, so book in that product, absorb on through that product, or if it is not, it should be apportioned on a suitable basis. Next, last but one, what are the areas to be comment? This is the vital point. I am observing this list got in my report. Number one, violation of cost accounting standard. If there is any violation of cost accounting standard in any of the heads, you observe, you must report, you must qualify the report. Number two, you have to report adequacy of the internal audit of cost record. You have to give the certificate also, certificate part you have to give. But as there is no separate cost record as on today, the internal audit of the company is sufficient to cover this point. If there is any report, you should go through it and see whether it is adequate or not. Number three, record keeping system and ascertainment of true cost of production. You have to certify true cost of production in your audit report. So, very careful that it should not be missed on. If there is any such element in your opinion that should not be part of the cost or should be part of the cost, don't hesitate to raise this and compel the company to adapt to your decision. Number four, cost center wise productivity, man and machine. Productivity, you have to report also productivity. Profitability of the cost centers, cost center wise capacity utilization, performance of ongoing project, outgoing project, running project, performance of controllable cost, commencement of correctness of the sales billing, overall performance, correctness of sales billing. One point you must consider. If there is any prior period credit notes, it should be segregated and should be part of the reconciliation item. If there is prior period incentive, that should not be part of the sales turnover, that should be eliminated and should be part of the reconciliation statement. Overall performance of the mine, compliance of the cost accounting standard, review of the internal audit report, variance analysis, other relevant points. These are the general points, in my opinion, I am considering in my report. These are the points and prepare my report accordingly. Thank you for patience hearing to me, and I again give you thanks to bear with me for a long hour. Thank you. Now, CMA Jaydip Tiwari will discuss about maintenance of cost record, which I have told that how to prepare the cost record. Mr. CMA Jaydip Tiwari. I am handing over the mic to the CMA Jaydip Tiwari. Mr. Jaydip, CMA Jaydip Tiwari. Please come on the dial.
Mr. Jaydip Tiwari is a practicing cost accountant. He is in practice since 1992. He has vast experience in various cosmetics and various projects. Now he will tell about maintenance of various cost reports.
From the date of the return. As per getting guidelines and yes, it should be.
Good evening, everyone. I'm CMA Jaydip Tiwari. Today's seminar topic is maintenance of cost records and cost audit. CMA Alokesh Dutta ji has given a very comprehensive, detailed and very comprehensive lecture on the statutory compliances as per the CRA Act, and he has also given a very good overview of the annexures to the cost audit report and maintenance of cost records as per CRA 1 of the company's cost records and audit rules 2014. For the companies for filing of the cost audit report as well as statutory compliances as prescribed in the Act, the annexures and all the parts of the cost audit annexures to the cost audit report. I will not just give a detailed analysis as to how to proceed to prepare actual cost records for the company. See, the purpose of preparation of cost records, one is of course the statutory part, the compliances, but the main part is cost analysis, cost assessment, preparation of actual cost for the company, and then further cost control and, if possible, reduction of the overall cost of the company. How to proceed for maintenance of cost records? First step,
7 minutes 40
for any company which is come under the purview of cost records and audit for the first time, how do you proceed for the maintenance of the cost records? The first step should be understanding the manufacturing process of the company. How do you do that? You visit the plant, the manufacturing facility, and understand the manufacturing process fully. After understanding the manufacturing process and going through all the process of the plant, the first thing that you have to do is you have to prepare a process flow chart which clearly mentions the inputs and the outputs at various stages of the processes. Next, you have to prepare a quantity flow chart for all inputs and all outputs. You will be better if you prepare them month-wise so that you have got a quantitative chart for all inputs, outputs. Inputs of course are the raw materials and outputs can be finished goods or even intermediary products or by-products or waste products. Second step, after understanding the manufacturing process completely, you have to prepare a chart of cost centers. Everybody knows, we are all cost accountants. Cost centers are of three types: production cost centers, service cost centers, and overhead cost centers. Now, what is a production cost center? As is quite evident from the name itself, each distinct process where production activities are undertaken in a company are its production cost center. If it is a single product, single company, then there will be mostly one cost center if the production is carried out with one single machine. But if it is subjected to different stages or different processes, then each process should be a production cost center. And then again, companies which have got multiple products in the process industry where original inputs are converted into an intermediate product which is further processed into separate finished goods, then you have to prepare cost centers for each separate process and each separate product, be it intermediate product or the final product. And because intermediate products are mainly transferred to the next process, but there can be some sales of the intermediate product also, so you have to have as production cost center cost of sales of each product separately. Suppose a steel company for an integrated steel plant, the first process is sponge iron. Then second process is sponge iron is processed and converted into MS ingots or MS billets. If there is further integration of the company, then MS billets are utilized for preparation of steel products in the rolling mill. So you have separate cost centers such as sponge iron, SMS, the steel melting shop where you manufacture MS billets or MS ingots, and thirdly a rolling mill where you manufacture steel products. But then you have to have cost of sales of each product, cost of sales of sponge iron, cost of sales of MS ingots or MS billets, and cost of sales of steel products, be it TNT or be it angle, channel or any such product. Second set of cost centers are the service cost centers. The service cost centers again, this is quite evident. They are not directly involved in the production process, but they give service to the production, to maintain the production, to sustain the production process throughout the working of the financial year or the company undertake production. Now, so just some examples can be, maintenance, workshop, material handling, laboratory, quality control, water supply, power supply, DM plant. It will depend on the type of industry that cost records are maintained for. One item which sometimes people don't take it into consideration for service cost sector is waste disposal. Some companies produce a lot of waste products, and huge expenses are incurred in disposal of the waste. Just for example, for a steel melting shop, slag is produced as a byproduct, in fact as a waste product. Disposal of slag is a big expense, so that also can be taken as a service cost center. And in a power plant, as disposal is another one example where heavy costs are incurred, so you can take it also as service cost center. Third type of cost center are the overhead cost centers. Overhead cost centers are three categories: manufacturing, administrative, selling and distribution. Now, it is a bit cumbersome, but to actually analyze the cost properly and in detail, one has to always try to maximize the number of cost centers so that the area to be analyzed is a bit smaller and costs can be easily identified, controlled and assessed. So one has to always try to have a maximum number of cost centers as possible. And in a company where the cost records are being maintained for the first time and you have to initiate the cost records, cost centers should be reviewed for a period of 2 or 3 years. It's basically a trial and error system where you have to review the cost centers whether costs have been allocated or are allocable to the cost center or not. If the materiality is not there, then some cost centers can be deleted. But you have to try and maintain as maximum as possible that costs are properly allocated and you have a maximum number of cost centers to control and analyze the costs. A third step. Okay, you have prepared the cost centers at a glance. First time you are implementing cost centers, you have listed the production processes, you have understood the production process, prepared flow charts, completed charts, and you have charted the cost center. Now you have to actually prepare cost records properly in good understanding, and especially if you are an employee of the company, to satisfy each and every department of the company, that is production department or the marketing department or the non-technical service providers or workshop in charges on maintenance, you have to understand the cost centers. What do you mean by understanding cost center? See, a production cost center is distinct cost areas to which cost can be allocated. You should try to maximize boundary for a production process, then that has to be taken as one cost center. If it cannot be broken into segments, then you have to take this as one cost center. understanding the cost center means you have to understand the process. You have to understand the other subjects that are linked with that industry. You have to have a working knowledge. In fact, being a cost and works accountant that we were earlier, you have to have a more than working knowledge of physics, chemistry, metallurgy, mechanicals, electricals. You have to know a bit more than a normal person is supposed to know. So that when you have to discuss or when you have to put up your costs and discuss with other departments such as the technical persons, you should be able to talk with them in their language. You should be able to convince them, or you should at least be able to understand what they are putting forth to you, technically, right? Then second is the relevance of the service cost center. See, service cost center you can prepare, okay, these services are available, these services incur a cost, you can prepare the service cost center. But to understand the relevance, first relevance is the materiality. There should be a cost allocable and a certain amount of cost allocable which makes it material. If the cost allocable is very low or the data available and it is not properly allocable, then the relevance of the service cost center is not there. You have to take care of that. When the service cost centers, you all know, costing encompasses two major parts broadly. One is the primary distribution of costs, second is the secondary distribution of costs. Primary distribution also known as allocation and secondary also known as apportionment. So when in a practical mode, when you are talking about the service cost centers, you have to take care that you prepare the chart of the service cost centers in a proper order. Theoretically, we are all read that there are many methods of apportionment of service cost centers, that is secondary, trial and error methods, there are reciprocal methods. But in practicality, it is not plausible to take care of these theoretical methods. So what you have to do is, you have to prepare and chart out the service cost centers in an order such that it is a maximum giving first and least receiving. That is so that the apportionment when done is done only in a forward manner. There should not be any backward apportionment. Otherwise, in practicality, we get a circular reference in the Excel sheet which you prepare them because there will be a reciprocal effect on that. So you have to take care of this order of service cost centers. Then third is, of course, overhead cost centers. Now there are three, manufacturing, administrative and selling and distribution. Manufacturing overheads is nothing actually but the sum total of all these service cost centers. I think we should take care that there should be no direct allocation to manufacturing overheads. Because manufacturing overheads is nothing but the sum total of the service cost centers which cater to the production by giving it various services and sustaining the production. Administrative overheads, broadly, we have to segregate into cost and non-cost items. Non-cost means you understand very well, previous year costs are there. There are some items like, we'll come into it detail in later slides. We have to segregate them between cost and non-cost items. And S&D expenses or overheads are basically of two types. One is which is identifiable to a certain product, like sales commission or freight outwards, and others are which are general sales and distribution, advertising expenses, sales promotion. So you have to identify it into directly identifiable product and general S&D overheads. Now, as I said earlier, there are two main parts to preparing cost records. One is the primary distribution. That is the allocation of cost. All costs incurred during the year The first step, all costs have to be allocated to the production, service and overhead cost centers. Second, you have to also analyze that whether any cost should have been allocated to a cost center, but the available data does not support this or does not show this. For example, like stores and spares, salaries, sometimes more than one department are clubbed together and not shown separately. But if we have prepared a service cost center or production cost center separately, then you have to make sure that costs are allocable to both the cost centers, even if it is clubbed in the financial records. So you have to make sure to do that. How do you do that? You scrutinize the relevant vouchers, even if your cost center. So then you have to discuss it with the concerned officers of that department, whether or not these expenses should be have been allocated, but even if that even still the financial accounts or the records maintained by the company do not give the cost for that cost center, even the vouchers are not absolutely clear as to bifurcation between two different cost centers, that we have to discuss it with them and try to find an amicable solution so that cost should be, because otherwise the total cost of that cost center will not be true. So that you have to do, you have to discuss with the concerned departments and the officers of the services or production or whichever cost center where you are not getting any cost, and try to find a solution to that. And even if then, if there is no solution, even if the concerned officer is not able to give you a clear picture, then as cost accountants, we have to use our best judgment and try to separate out some cost from the total and allocate it to the cost center where it should be allocated. Cost accounting records. The cost records, as Dutta is already given in his presentation, they have to be prepared as per the CRA1. Agreed. But CRA1 gives the statutory requirement, mostly gives what has to be done in order to prepare the cost audit report portion. But actually cost accounting records should comprise of details of each and every item of relevant costs. So how do you, what all records one should maintain for proper cost accounting records of a company? The first record that one should maintain is production records. Production records simply means month-wise production quantity of all outputs, be it finished goods, be it semi-finished or intermediate products, be it byproducts or be it waste products. You have to maintain it month-wise quantity. Second record that one should always maintain is sales records. Again, quantity-wise. Costing, in costing, quantity and amount go hand in hand. Every record that you maintain, wherever possible and wherever available, quantities have to be taken into account and maintained properly. So second record, the sales records, again month-wise sales quantity for all materials, finished goods, byproducts, waste products, raw material and also captive consumptions if any. You have to maintain it month-wise quantities. Then inputs, raw material consumption records. Again you have to prepare it month-wise for each separate input. The raw materials, the process materials and again captive consumptions, either from its own generation or transferred to it from other processes of the company. After this quantitative data, then you come down to the items of costs such as salaries and wages. Now, of course, Dutta ji has already said in the earlier presentation that you have to take the gross salary. You have to take care of certain other things as voluntary retirement benefits derived from that area. But in general, when we are talking about question of cost accounting records, salaries and wages again you have to prepare month-wise and cost center-wise. Because any cost center which does not have any employee or any personnel is not really possible except very few and very selective industries. Otherwise, there will be a certain amount of manpower in every cost center. Again, same issue comes whether the salary is allocable to that cost center is identifiable or not properly in the salary bills. Then you have to find out various means and allocate the salary. So salary wages month-wise, cost center-wise. Second, stores and spares. Again, same. It has to be prepared month-wise and cost center-wise. Now, stores and spares is a big issue, especially in most private sector companies. They don't prepare proper department-wise consumption charts. The store's consumption is actually just derived in the reverse basis as to opening stocks and closing stocks and purchases. So it is derived. So the issue comes if the data is not maintained department-wise, how do you allocate to the various production and service cost centers? Even overhead cost centers, stores and spares are issued. So then again you have to discuss with the stores department head if it is not given department wise the consumption chart, then again you have to discuss with him and try to find out an amicable solution as to maybe in percentages as to what percent is stores and spares are being issued to various cost centers. Same thing with salary and even more so with stores and spares. Next is of course power consumption. Again you have to prepare records for power consumption month-wise in units and amount. Next record that we have to maintain is repairs and maintenance. Again repairs and maintenance have to be prepared month-wise and again cost center-wise. And this also, as with stores and spares, again in some companies this poses a problem as there is not much clarity in the vouchers also. Suppose they are given that the repairs are for a motor, where in which cost center that motor was installed, that has to be identified. So again you have to verify the vouchers, and if the proper narration is not available in the voucher, then you have to go for the get passes or whatever the document the company is maintaining to identify to a particular cost center. Next you have to prepare for depreciation. But depreciation is not a monthly feature, it's an annual expense. So depreciation you have to maintain records, it's just cost center. And again the problem is there that depreciation please asset register, how much details are available with the company, because company is normally they prepare the depreciation chart as per the type of asset. So again you have to try to verify and analyze the assets and identify each asset properly to the cost center and then allocate the depreciation to the cost center. Then in some industries where there is a power plant attached either with the existing other plants or there is a separate power generation unit. For them you have to prepare cost accounting for power generation, month-wise again units and distribution to the cost centers as to which cost center has been utilizing how much power, month-wise units. Still many items of costs are there for which we don't need to maintain because there is no month-wise charting out or requirement of any month-wise cost center-wise records for those expenses. So we can have a separate sheet where we can include these expenses such as that carrot some carrot expenses or other payments to employees other than salary, that is bonus, gratuity or leave travel concessions or leave allowances, then staff welfare and administrative expenses and S&D expenses, finance. And we have to again identify them to cost centers on some or the other basis. Like other payments to employees or bonus, they can be allocated on the basis of the salary. So we have to identify each expense to a particular cost center, whereby when we prepare the final cost sheets, we have the data available with us. Then one item that is very important, it is credit for byproducts. Now, in financial accounts, as you all know, byproducts, sales are shown as other sales or byproduct sales. But in costing, one we have to identify the byproduct as to in which cost center, to which production cost center we should pass on the credit, which means the credit should be passed on to that production cost center wherein the byproduct is generated. You have to take care of that. Second, you have to again mention and chart out the quantity generated for the year. Opening stock and closing stock adjustments should not be done in costing because they don't pertain to the same current year. Opening stock is for the generation of the previous year normally. So we don't take into consideration byproducts, opening and closing stocks because that is not relevant to us. Relevant to us is the quantity generated during the year. Right? So for that year, we can credit them with the sales for realization of the byproducts. That is one. Second, especially in steel divisions, which is very abundant, that is the most abundant industry in our state. In steel, especially this things come that there is a huge captive consumption. Be it byproducts in one process to other process, or sometimes the byproduct generated in the same production process is utilized again as raw material in same production process. So now in financials, understand that there will be no accounting entry for that because the byproduct is generated from the same process and consumed in the same production process. But in costing, it is not correct. We have to value by taking the rate of maybe the average sales price if there is any sales, or if there is any sales in the previous year, if there is no sale in the current year, then maybe the average sale price of the previous year. You have to value and you have to give credit for the quantity and value, and if it is consumed the same product, same process, you have to also take it as a raw material quantity and value in the process. Either in the same process or if it is in another process where it is consumed, then in that process you have to take that as quantity input, so that the yield that one gets in that process, the output yield is justified and it is correct. Right? So the quantity portion is very important. Then one thing we sometimes try and incorporate the cost economy because it's the balanced quantity of the quantity generated during the year. Suppose we generate 100 metric tons, we sell out 20 metric tons and consume captively 16 metric tons, we are still left with a balance of 20 metric tons generated during the year, which has incurred in input cost, which has incurred other services cost, direct cost as well as overhead. So we try to give the process from where it is generated the credit for this balanced 20 tons also, so that it is properly absorbed in the cost and related to the cost. Right? Then service centers, cost centers, apportionment. Now we come down to the secondary apportionment that is there, secondary distribution of cost, that is apportionment cost. Service cost centers are firstly all costs which have been allocated to the service cost centers in totality are then apportioned to the other cost centers, service to service cost centers, service to overhead cost centers, service to production cost centers. Now, how do you apportion the service cost centers? One is of course the direct basis, whereby services such as power or water, which can be measured in quantity and identifiable to a process or a service or the production or the administrative or selling, where the quantity is clearly there, if this much quantity has been consumed there, so you can apportion that on a direct basis with that quantity. If the quantitative data is not there, like for the maintenance or workshop, there is no quantitative data as such. So you have to try for some other basis, discuss with the again the in charges of those service cost centers, and still if there is not there, or with discussion with the department heads, if there is no clear cut basis, then you have to, with his help only, you have to prepare some basis using your best judgment, your knowledge, discussing with the department head, so that all the expenses allocated to a service cost center are apportioned to other cost centers, right? Now, once you have prepared all the charts, all the cost records, you have prepared a service center apportionment sheet, whereby you give the apportionment basis of each and every service cost centers and overhead cost centers. Now you come down to the final output, that is the cost sheets. Now the first final output that should be prepared is the raw material consumption chart. The raw material consumption chart should be prepared for each production process separately. Raw material wise, in quantity, rate and amount, showing opening balances, purchases, all procurement expenses such as freight, commission, any taxes involved as such, any loss in transit, and you have to give it the credit for any raw material sales, and after adjusting closing stock, you arrive at raw materials consumed for a production process. Each raw material consumed separately. Once you have prepared the raw material consumption chart, then with the references and details available in the cost record that we have maintained, you should prepare a summary of the total incomes and total expenses for the year, showing items of costs and columnar cost centers. That summary is in two parts. Yeah, in fact, we go into three parts. First part is the primary distribution of costs. Each item of cost is mentioned separately, and each cost centers in each column is given, and the allocation as per our cost records that we have maintained month-wise, cost center-wise, you have to prepare that summary of the direct primary distribution of costs. Then you have to also show the next part is you have to show the secondary distribution, that is all expenses of the service cost centers and overheads are apportioned to other services or overheads or the production process, as we have shown in the service center apportionment sheet. Once we have prepared this summary, then we have to prepare the cost sheet. Now in the summary, we have a columnar table showing all cost centers, but cost sheet now we have to prepare for each and every cost center, starting with the production cost centers and the service cost centers in the order as decided earlier itself, the maximum giving and least receiving order, and then the overheads. In practical, we should take care that our information flow has to be correct. Understand? It has to be only forward. There should not be a reciprocal or even forward or backward references of data or flow of data. You have to take care. Otherwise, you will face problem at the time of the financial and costing profit reconciliation. There will be some difficulties for that. So, I am giving you these details as to in the order in which the cost sheet and the cost records should be prepared. So when you prepare cost sheet, the first cost sheet should be the raw material consumption chart. Second, you have the summary, and from the summary and raw material consumption charts, because the quantities are available in the consumption chart, in the summary we only show the amounts. The quantities are not available, and the quantities available, we have already prepared the cost record showing quantity of the input and output. With all those references, we have to prepare the cost sheets for each cost center. Production, service cost centers, and the overhead cost center. Next, we have already prepared the summary where we have shown the primary distribution, then we have shown the secondary distribution. So in the cost, once we have prepared the cost sheet and shown the allocation, total cost has been arrived, then we have to show the distribution of the cost. We have to show the secondary distribution of the cost of the service cost centers to other cost centers. As I have already said, once we have prepared the cost records, we start the preparation of the cost sheets, wherein the first cost sheet or the output that we prepare are the raw material consumption charts, and then we prepare the summary of total expenses and total incomes, showing each item of cost and the cost centers in each column, the productions, services as well as overhead costs. Once we have prepared the summary, then we prepare cost sheets for each individual cost center separately, clearly showing quantity, rate, amount, as well as cost per unit of the production for the current year as well as previous year. Next, we prepare the service cost centers separately, and we apportion the cost of the service cost centers to other service cost centers or overhead or production cost centers on the basis which we have already given in the service cost apportionment sheets that we have prepared earlier. Last, we prepare the overhead cost centers, cost sheets for overhead cost centers. Costs are apportioned to production cost centers on a suitable basis. On what suitable basis? That is, the basis can be adopted as conversion costs of each process, or in the cost of sales of each process, production process, or if not possible, then we can take into consideration that we can apportion on the basis of turnover of each process. Now, what is there in the cost sheet? First, when you prepare the cost sheets for the production, we have to give certain data as headings. Licensed capacity of that production process, installed capacity, and derive the capacity utilization. Then we have to show the actual production of that finished good in that process, production process, total inputs consumed in that process and outputs as well, thereby calculating the yield of the final product with reference to the inputs. Now these yields have to be, we go further when we go, then we will understand what is the usefulness of these yields. There are some industry norms, there are some benchmarks, and governmental authorities are very keen to observe the yield of the production processes as to assess whether the company has shown their production actuality or not. Because yields determine whether or not the actual production has been shown or not.
बैटरी ड्रेन आउट हो रहा है, बंद हो जाएगा। अगर मैं इससे रिकॉर्ड करूँगा इसमें जो सकता हूँ
that has been decided by the governmental authorities, then they will always come for a scrutiny and will check. So you have to be very careful that you show the yield.
इतना टाइम चलेगा बैटरी रहेगा।
One, it should be comparable to previous years, and second, it should be cost sheet for the production cost centers. Order is of course very natural. First you show the raw materials consumed. Each individual raw material should be shown separately, clearly giving its quantity, rate, amount. Then you have to show the direct expenses. Then the service cost centers, then the cost. After that you have to give the credit for the byproducts, credit for sale or captive commission or transfer. And then you have to adjust the work in process. This has to be in an order because work in process does not involve administrative overheads, because it is the material which is in the production machine. So we have to adjust the WIP before including administrative costs to the production. So you adjust the WIP then here, then you take into account the amount apportioned from the administrative cost centers to this particular production cost center, right? After which we adjust the finished goods, closing and opening. There is a small point to be made here, that the rate of the closing stock is derived. It is not preordained, it is not arbitrary. It has to be derived, taking into consideration the opening stock and the total production for the year, quantity and amount, and then derive the rate. And then this rate multiplied with the quantity of closing stock gives the value of the closing stock. Right? After which we have the finance cost. Lastly, one thing should be there, each item of cost should be shown as cost per unit of the final output. Raw material, suppose you have raw material, quantity, rate, amount, but there should be another column as to cost per unit of the final product, current year and previous year, for all items of cost. Then, if there is a further process, we transfer the total amount transferred after adjustment of closing stocks, we transfer the quantity and amount to the next process, or if there is no other process and it is directly sold off, then we transfer to the cost of sales. Now cost sheet for cost of sales. First thing is of course transfer from the production process. Then as I had said earlier, as to there are two types of selling and distribution costs. One are the direct costs which are allocable to the product, like commission on sale of that product, or outward freight of that product, or any insurance charges for that product. You add those to the transferred quantity and amount from the production process, and then we had already prepared the cost sheet for S&D overheads. Now the S&D overheads are allocated to the production, the cost of sales, the cost sheet. If there are more than one final products, then they have to form, you have to show a basis as to in what basis you have to transfer. It is either by cost of sales or turnover. But the case, it is one further point is this, that if there are multiple products wherein one product is manufactured in a production process and transferred to next process, some part is sold maybe, but mostly it is transferred to next process. So then when you prepare the S&D overheads and try to apportion the S&D overheads to the cost of sales, the cost of sales of the quantity of the product or cost of sales of the product which is mostly transferred to next process will be very low as compared to the next process wherein all of the finished good is sold off. So they have to take care that the basis, when you form the basis, even if it is the turnover, you have to include in the turnover of the goods that have been transferred to next process as sales plus transfer value. You have to include both. That will be the actual turnover for that production process of that finished good. You have to take care of that, right? As given in the turnover in case of intermediate product, turnover for same to include cost of transfer to next process. That is important. Otherwise, less S&D will be apportioned to that material and it will be totally apportioned to this second material which is the
নিয়ে
current
আমি যখন
cost.
শেষ হবে তখন বিরিয়ানি করবো
Then the total, once you go into this cost of sales, you should remember the total sales, they have to be broken up into modes of the sale. Because sales can be in different modes. One is direct plant sale, one can be consignment sales, one can be exports. So direct plant sales are directly lifted by the buyers from the plant itself, so there are no further costs allocable to it. But in the case of consignment sales, export sales, there will be further costs. So you have to prepare cost of sales cost sheet separately for direct plant sales, consignment sales or export sales. Because not only cost will be different, even sales realization will be different per unit. So you have to prepare separate and calculate margin for each type of sale. So now you have completed all the cost records and the cost sheets and found out the margins of each product which can be total as the total costing, profit or loss. Last is the profit reconciliation. Of course, profit reconciliation means costing, profit or loss to be reconciled financial profit or loss. Now what are the major items that one has to chart out for profit reconciliation? First is of course any incomes which have not been considered in cost. What are those incomes? Incomes which do not directly relate to the production of the material. Incomes such as interest incomes, interest on FDs, interest on some delayed payments or from some debtors. Some people like to take interest on debtors and all in costing because it is part and parcel of the business of the company. But it is up to you. It is a bit debatable and we can think as whichever is more suited for our purposes. Second item is expenses not considered in cost. These are the expenses which are previous year expenses or expenses not directly again linked with our production processes. Third item is the difference in valuation of stocks. Now sometimes when we say difference in valuation of stocks, we mean only closing stocks, finished goods, which is not correct. Because when you are preparing the raw material consumption chart, the raw material closing stock is again the rate has been derived after taking into consideration all other expenses incurred on that raw material. That rate might be different with the rate adopted in the financial accounts. When you say difference in valuation of stocks, it means difference in valuation of finished goods and raw material. At least these two you have to take into consideration. And then there is one line which, because there is a fixed format, almost profit reconciliation as given in the analysis of the cost and report part D2. So that is any other adjustments. So whatever items you are not able to show in these three, you can show in other adjustments. You can give breakup, you have to give breakup. What other adjustments? You have to mention them point wise, 1, 2, 3 like that, right? So now I just like to show some details as to what items are not shown in the costing and are appearing in the profit reconciliation. Now incomes not considered in cost. What are the incomes? Trading profits. If the company undertakes some trading business also, side by side, production business. So those trading profits will not form part of cost, so they have to be shown in profit reconciliation. Trading profits and income not considered. Then interest incomes, profit on sale of fixed assets, some miscellaneous incomes, exchange rate fluctuations, excess provisions written back. Sometimes we have provide for some expenses in our financial accounts, but in the next year when the provision is not fully charged of, we tend to write back the provisions. Again, they do not form part of the cost, so they have to be shown in the profit reconciliation. And then there is one item, sometimes we don't actually take care, insurance claims received. Normally insurance claims received are basically from damage or loss in the previous years. So again, they don't protect the current year. Sometimes they are shown as net of repairs and maintenance cost, but that is not the correct practice because repair and maintenance are for the current year and insurance claims received are mostly for the previous year because it takes time. So we should try to identify those and show in the profit reconciliation. Expenses not considered in cost are expenses on sale of assets, bad debts, provision for doubtful debts, sundry balances written off, and again exchange fluctuation. If it is a loss, exchange fluctuation should be in income, or if it is in the income side, you have to show income not considered. Right? So this is one small point as a cost accountant, which I feel is in the profit reconciliation, two items are given. One is incomes not considered in cost, expenses not considered in cost. So what about any items not accounted for in financial accounts but we have taken in cost accounts? Can there be any items which have not been considered in financial accounts for whatever reasons? But when we are preparing costing, we have to take into consideration this cost. There is no such line. So where do you show it? You show it in other adjustments. Okay, but as cost accounting, we should have some. Anyways, so what items which have been considered in costing, but there is no recognition of the same in financial account, which is given some points. One is of course captive consumptions. So captive consumption, there is no recognition if it is in the same process. Sometimes even in different processes, there is no recognition properly in financial account, but then it is generated from that same company and the production process or other process of that company and consumed in the company itself. So there is no recognition, but we have to give proper cognizance to the captive consumptions. We have to add them to the raw material if they are consumed as such or to a process material and credit the same process or the different process from where it is generated. But we have to take into account both portions, both entries. Right? Then credit for, as I told you earlier, credit for balance quantity of the generation of the byproduct in the current year, which is not either sold or captively consumed, but because it has been generated in the current year and expenses incurred on it on account of inputs and other expenses, so we have to give credit for that. Then there is sometimes in financial accounts, if there are different processes, like suppose there is an integrated steel plant, where you have a steel plant and you have a power plant. So the power plant generates power and supplies to all the steel division, sponge iron, SMS or rolling mill. And in financial accounting, they assign a transfer price, and in that transfer price, they create and they debit the. But when we go for costing, and if there is suppose an integrated steel plant, just an example that we have to prepare two separate cost records, one for steel division and one for power division. And again the transfer price will be derived or arrived in the cost records and cost sheet of the power division cost records. And at that price, at cost of that price, it will be transferred to the steel division. That price might be different with the transfer pricing and valuation in the balance sheet. So that will again form part of our profit reconciliation. Right? And then there are some credits and debits of waste products utilized. For example, again steel plant, because steel plant is a very unique plant because there are different plants and there is the very reciprocal usage of waste products and byproducts. In a steel plant, if there are sponge iron facilities is there, and again in integrated steel plant, if there is a power plant also, and if there is a, of course, if you want to understand the costing of power division, that is a very separate topic. But there are boilers in the power plant. There are two types of boilers. One is AFBC boiler and one is WHRB. WHRB means waste heat recovery boiler, which is heated by the waste heat of the sponge iron plant. So there is no accounting for that in some companies, in most companies, for this transfer of steam, or it is called steam, or it is called waste heat from sponge iron to power. But because in costing, you are preparing two separate cost records, you have to take into cognizance this fact. You have to make, if there is some measurement, normally they have some measurement basis on that. So we have to value at some arbitrary valuation of the waste heat of the sponge iron, and give the credit to sponge iron and charge it to the boilers in the power division. There is no accounting for this. These are certain items which have to take into consideration when we are preparing cost records for companies, right? Now, once we have prepared the cost records, we have prepared the profit reconciliation, we have tallied our costing profit with the financial profit. These are work companies. Some would say yes, but it is not. Why? Because once you have prepared everything, you don't sometimes see here or there. You see a straight line. This is you have to prepare this cost record. You have to prepare this cost sheet. Then you have to prepare the cost of sales, arrive at the costing profit or loss, and reconcile with the financial profit or loss. But sometimes we tend to miss out certain finer details. The next step, it should be there. It should be analysis of the cost records such prepared. Now, what all things you need to analyze? What you have to analyze is, if there are any changes which you should have done or you have not taken into consideration, any division or any improvements, right? You have to verify the capacity utilization. You have to, as I said earlier, you have to verify the yields, especially with the industrial norms, yield as allowed by the statutory bodies of this government. Like in earlier, we had an excise department in a steel industry, they would have a norm for burning loss. So you have to take into care that burning loss should not be more than that has been allowed by the excise department. So you have to understand those things, you have to take in consideration, you have to analyze the yields, then you have to analyze the valuation of the stocks. Just verify, re-verify, recheck that whether stocks have been valued properly, finished goods and raw materials. Then you have to again, earlier also I had said the thing, you have to scrutiny whether all relevant expenses that should have, that are being incurred in that cost center have been taken. Sometimes because it is not clearly available in the data, we might have missed out on some. Again, you have to verify that and compare the cost per units with the previous years, with the similar process plants of other plants available in that area, if the data is available with you, and compare it with the industry benchmarks, so that it is not questioned at some other time by some statutory government body that your cost per unit is not actually comparable, and maybe you are not preparing cost records properly, or maybe you are not preparing the balance sheet properly because you are not showing the productions or the inputs correctly because of various reasons that companies might follow. Just given a slight thing, just some common mistakes that sometimes people tend to do in cost records. One is, first thing that you do, I told you, you have to prepare a quantity chart for all inputs and outputs. So sometimes it happens that there is a slight gap in the quantity flow, especially in some industries like Dutta was mentioning textiles. Textiles industry mein quantity flow is very difficult to prepare, especially yarn making. If anyone has any experience in yarn making, you can understand simply as that yarn when prepared in it's called top, lacha ऐसा बनाते हैं. Then it is combed. It is combed. The excess material is taken out. It is sucked. Then it again put in the input. Again it comes. It keeps on repeating. So it is very difficult to prepare this chart. So sometimes gaps appear in these charts, and the total quantity is not appearing in the quantity chart. You have to take care in that, because that will again result in wrong yield. Again yield will get affected because input is not correct properly. Second is some captive or waste consumption जो material मैंने बताया, they are not included in the cost record. You have to take care that each and every item which has been utilized is accounted for in quantity and amount. And third is, you sell an item, it is rejected, or for whatever reason, it is returned back to the company, taken in financial accounts as sales return. But in that sales that has been returned, the quantity that has been returned, it is again reprocessed as rejects. You have to take that into consideration. You have to again take the quantity and put it as an input in the process, so that again the input-output ratio is correct. Right? Then sometimes there are some outflows, like I told you, waste heat from sponge iron utilized in power plant. There is no cost incurred as such by sponge iron or by power unit. But there is an outflow and there is a utilization of a material. So again you have to take into consideration in costing both sides. Utilization from one plant to create given to that, and an input cost in the user plant. You have to take care of that. Then again, as I said first when I started my presentation, that we have to have some knowledge of other subjects, physics and chemistry. You prepare cost records for steel. You should understand what is the first input is sponge iron. What is sponge iron? What is this chemical formula? What are you doing to it? Like sponge iron plant is also called a DRI plant. What is DRI? DRI is direct reduction of iron ore. You should know what is reduction. If you don't understand reduction, then there will be, you will not be able to understand that cost center properly. You should know what is reduction, what is oxidation, what is the chemical bonding, how you break a chemical. You should understand some chemistry. Then when you go for power divisions, you should know what is electricity, the flow of electrons. Why do electrons flow? Because there is a potential difference. You should understand those things. Like physics is involved. You have to understand some physics. And again, if you are steel industry, you have to know some metallurgy, so that you can discuss or at least understand what the technical persons are telling you. For that, you need to have knowledge of other subjects, mechanics, fluid mechanics. You understand everything a bit, at least a bit, more than a layman or more than an normal accountant. You have to understand these things. Then there are the treatments of auxiliary consumptions. This is very true in a power division cost records, wherein some power generated by itself is consumed by itself as auxiliary consumption, be it in its the production centers or in the service cost centers. So what we do is, of course, when you are distributing the total cost generated, you give it a grade for the quantity auxiliary consumed. But what is the rate of that auxiliary consumption? At what rate should it be charged to the other user departments such as the service cost center in a power sector company? And you can understand it separately by this, that once you have allocated to the service cost center, it is again reallocated or reapportioned in secondary distribution back to the production process. And again when you come to the distribution, that auxiliary power cost is loaded in the cost. So they have to take care that the auxiliary power consumption rate should not include its own cost. So there you have to prepare it properly, right? And the last, of course, one should not have complete faith in the financial accounts. You always should have some doubt that there is something missing, let me try to find out. If you cannot handle it, very good. If you can, very, right? Now last, I just want to say one thing. Who is most suitable for preparation of cost records? Now, two types, two persons can pay. One is employed in the company, and one is an independent practicing cost accountant. Both are capable, both are competent. There are certain restraints or certain, differences for the company's employees and again for the auditor also. An independent cost accountant in practice. So who is more suitable? It will again depend on the type of company or type of production. But an employee, he might sometimes be a bit influenced by the policies of the company, bound by the company policies and by his seniors, and is also used to the working culture of the company, and so sometimes he prepares it in a same way that these sometimes don't allow him to give the full picture, right? an independent cost accountant, he is also a bit hampered in the sense that he does not know that particular industry in depth, which an employee knows better. But again, a cost accountant, as we all are cost and works accountants, now new members only are cost accountant, we are all cost and works accountants, so we are expected to know other areas other than what we should know, like the manufacturing processes and the industry practices and norms. So that also helps us, because we are not bound by the same one company. We have undertaken works in various companies, so we are more aware of the industry and industry practices and norms and benchmarks. So we are in a better position sometimes to assess whether the cost records have been prepared properly or not. So this is just a thought on my part. Anyway, right. So any questions? If anybody got any questions on any type of industry or anything that I have said in my presentation, they can ask me, or they can even give out the questions and I can answer them separately. I think it's just about time. I think this is the right time. I think we're finishing right time. If there are any questions, we can take them right now, or maybe we can take it up later or sometime. Sorry, I'll take it separately. If anyone got, you can contact me. Thank you. Here I conclude my presentation. Thank you all for patiently listening. Let's hope we had a very enjoyable and deeply beneficial program. Thank you.